At 15:01, falling for a fourth straight session. Seeing some losses in UOB, DBS Bank, OCBC, and Singtel. The KLCI is also losing ground a touch, 0.1%. Commerce Asset and Berjaya leading the falls. Well, a step back on the Japanese bond markets this morning, but things are still looking strong. We've got Raman Meligard following the action from the Money Desk. How's it looking, Raman?
Well, Kathy, like you said, we've just taken a little bit of a step back here, and initially that is from new highs that we set yesterday. We hit 141 on the 10-year September futures contract. Today, the high has been 140.97. Now, if we just have a look on the Bloomberg Professional, we're standing at 140.89 now. So we have just dropped back a touch, about 6 ticks there, as you can see. And essentially, it's basically a lot of analysts and investors are still very strong or bullish on JGBs. And we've hit a lot of new contract highs throughout the week, throughout the last few sessions, and any move backwards that we've had has not been that significant. And again, so today we hit 140.97. And we've dropped back to 140.89. So the same thing pretty much happened yesterday. We hit a new high and we just dropped back a few ticks, and then again it's moved higher yet. So we'll have to see, though, if we can still continue to forge through that 141 level on the futures contract. And if we do, then we could be looking at some of the next levels. 141.25 would be one of the levels there on the September futures contract. Looking at the cash 10-year, this is the new number 241 bond, and we're looking at 1.224. Now, that's backed off a little bit as well. However, some analysts are saying that they could actually see a yield, perhaps, of 1.11. And that would be quite a significant move higher, actually, for bonds, and that's really continuing from what we've seen so far. We're looking at the 5-year right now, and that's yielding 0.299. So still a little bit of buying, but we've just taken some profits.
Thanks, Raman. Well, even Asian sovereign bonds are looking good. They are trading on a better note these days, with several markets winning rating upgrades from Fitch and S&P. Joanna Chua is Vice President and Sovereign Credit Analyst with Salomon Smith Barney. She joins us now for more from Hong Kong. So, Joanna, Malaysia and Thailand have both received ratings upgrades in recent weeks. Between Malaysia and Thailand bonds, which appear to be more attractive to you?
Bond is really not a liquid bond. It's a relatively small issue. It's been issued since '97, and it's pretty much a lot of it has been bought back by locals. So it's not really a bond that we can trade. So at this point, certainly, I think Malaysia, being more higher rated than Thailand, and a currently much more liquid market, that is really the better place to put your money.
But they are saying that Malaysia's bonds are looking pricey right now, considering the ratings upgrades. That has already been priced in.
Well, that certainly is certainly true, in a sense that pretty much Malaysia's upgrade that we saw just recently has been largely already expected by the market, since it's already been put on positive outlook. In Thailand's case, people really did not anticipate the timing of the positive outlook, although Salomon has always had a very positive view on Thailand and did expect that the rating would move to a positive outlook over the next 12 months. But certainly, even with that rating action or the positive outlook on Thailand, it really didn't have much impact at all on the existing bonds in Thailand, particularly the Thai 07 and the Samurai bonds, because they're very illiquid. So I think what this would have an impact is in potential new issuance out of Thailand, simply because it would draw the prospects of improving rating improvements, and that would drive spreads tighter. But at this point, that is for the prospective new issue, not for the existing issues, bonds issues out in the market right now.
So would you see much room for more spread compression in these markets?
I think it's, well, okay, like I said, in the case of Thailand, the existing bond is not really very liquid, so I think there's limited room for spread improvement now, especially as the market is anticipating new supply. In the case of Malaysia, I think there is still some room for improvement, particularly on Petronas bonds, largely because the rating action that we saw is a rating action upgrade by S&P. However, it is really the Moody's upgrade that we're expecting and anticipating in the hope of getting Petronas rating upgraded to single A level, because Moody's rates Petronas higher than the sovereign, and that, I think, would provide some more room for a spread tightening between Petronas gaining some ground vis-a-vis the sovereign.
What about for Korean bonds? Are we expecting another upgrade before year-end?
I think at this point, not really. It would be very difficult to expect a very quick upgrade now that it has reached single A levels across all three rating agencies. I think there's been more needs to be done in terms of progress in privatizing the banks. There seems to be more needs for confirmation that the new government that will come in next year will not conduct any change in economic policies. I mean, our base case expectation is that there will be no drastic change in policies, but there needs to be continued confirmation and continued progress in the corporate front for any proving rating improvements. But I guess one of the things that continues to constrain Korea is the North Korea risk, which we think is still very remote, but will put some constraint on the rating.
We'll have to leave it there. Thanks, Joanna. We've been speaking with Joanna Chua of Salomon Smith Barney in Hong Kong. Visa International says South Koreans are its best customers in the Asia-Pacific region. The credit card company says credit card usage in Korea reached more than $34 billion in the first half. That's a 76% jump from a year ago, partly due to the Soccer World Cup, which Korea co-hosted in June. Card usage in the other host country, Japan, rose 20% to $32 billion. Across the region, Visa said transactions rose 30% to over $113 billion. A lot of money there. We'll continue our week-long look at Japan's banking sector. JP Morgan analyst Charles Lambert will tell us what radical steps the government should be doing to sort out the sector. You're watching MoneyCast Asia.